So as the markets are completely crashing right now, guys, you might as well get your free money from Moomoo. If you haven't done so already, use my link down below, deposit at least $100, and just like that, you get up to 5 free shares of stock, each up to $3,500, and you have a chance of getting 1 free share of Twitter. Again, use that link down below. And now let's talk about what is going on, which these markets are absolutely a disaster right now. The Dow Jones is down 3.5%. We have the S&P 500 down 4%. The NASDAQ, get ready for this, guys. The NASDAQ is down almost 5.5%. This is a bloodbath. And the Russell's down 4.6% as we have the VIX up 25%, and gold's up 0.3%, and silver is pretty much at break even. So this is unbelievable considering yesterday we were up a lot, and considering the day before that, or when was that when we were down a bunch? It was a couple of days ago, right? It was the end of last week, right, where we saw the two big sell-offs where we went down 3-4% each of those days, right? And then yesterday we had that big pop after the Fed meeting, and now we're collapsing again. I mean, this just goes to show, guys, the absolute volatility, the absolute crazy volatility that we are seeing in the markets right now. And just like that, the VIX is right back over 30, and we're approaching that mid-30 level, which I've called out before on this channel, and I've mentioned to you guys, when these sell-offs get very ugly, when we're at pretty much peak fear, at least based on the past couple of months, the VIX has gotten to about 35 to 38. So maybe we do pump a little bit more on the VIX. You know, this could go up 35, 36, 37, and then expect for maybe another relief rally. We got to really keep a close eye on the VIX here. So going to SPY, you guys are going to see this lost all of the gains from yesterday and some. I mean, if you guys take a look, the low from yesterday on SPY was right around 414. I mean, 413.80, 414, pretty much right around that point. And right now we're trading under that. We're under $412, guys. Now SPY is officially down about 4%. So this, I mean, this is insane. And we're actually trading under the lows from 2 days ago as well, which was what, Tuesday? You know, Tuesday's low was right around 413.50. So this market is completely collapsing. And let's see the 20-day chart. We might be under moving averages. Yep, we're under both moving averages now, yet again, on this 20-day chart for SPY. And for Triple Q, you guys can see here, literally everything I just said pretty much applies to Triple Q. It's under the moving averages on the 20-day chart yet again. And look, it's right by the lows from a couple of days ago. The lows from a couple of days ago were 309. And mind you, 309 is a one-year low on Triple Q, right? Now we're at 311. We're pretty much right back to that one-year low, 52-week low on Triple Q, which is not good whatsoever, guys. Not good. This is really, really bad, right? Really, really bad if you're looking at this in the very short term from a bullish perspective. Obviously, there's many perspectives you could be looking at this from. Obviously, as a long-term investor, myself, you know, I am one of those. I'm sure you guys are as well. And, of course, we do trading and, you know, options, all these other things as well. But in my opinion, being a long-term investor, you know, having stable long-term investments is the foundation. It should be the foundation, or at least it's my foundation, right? So when I see prices come down, I like that because I'm buying the dip. But again, in the short term, it's very treacherous. And the thing is, with all this volatility, all this fear in the markets now, you know, it's going to scare people that are not as, you know, seasoned, I guess you can say, and they haven't been through volatility, if I could talk today, guys, volatility like this, and they might get scared and jump off the ship. And if you're a long-term investor, if you're looking at this from 10, 15, 20 plus years out, this is the worst time to sell. Absolute worst time. I'm telling you guys, it's the worst time. And if you made an argument, Stas, I want to sell or take some profits at, let's say, when Triple Q is at 400 or 380, 390, and mind you, right now it's barely above 300, I would have been like, okay, maybe take some profits, but don't completely jump off the ship. That's the point. You know, if you jump off completely, you know, you sell your entire account, go to cash, and then try and get back, you know, near the bottom or at a price that's lower, you're not going to do well over the long term, because you're going to miss the bottom. It's going to rebound. It's going to go higher than where it was when you originally owned it. So now you're like, oh, I'm just going to wait even more. Then it keeps going up. And then you're just going to be in an awful spot. So if you are one of these people that wants to panic sell, trust me, I'm not a financial advisor. So I don't know. Do what you want. But I would not jump ship right now. That's pretty, unless you need the money tomorrow. Again, if this is for a long term, if you need the money in a month, yeah, I mean, at that point, you shouldn't be in the markets anyway, right? So let's go on to what's going on here with some stocks. Make sure to hit that like button and subscribe if you haven't done so already, guys. We're almost at 25,000. We're about 25 subscribers away. Make sure to subscribe if you haven't already. I appreciate you all. As always, let's talk about Shopify, which we kind of knew Shopify's earnings were not going to be good because Amazon's earnings weren't good. We got eBay yesterday. eBay's earnings were bad. Their guidance was bad. Etsy, their earnings were bad. And if I recall correctly, Etsy's guidance was horrible as well. Let me double check that. Yeah, they guided way under the estimate for Q2 sales. So we kind of knew Shopify was not going to be good, and it's down. Look at this, guy. Shopify is down 14% on the day. Q1 adjusted EPS was 20 cents, so they still managed to be slightly profitable there. But if you look back to the previous quarters here, their profit for this past quarter was a lot lower than that. And compared to what it was a year ago they did $2.01. So year over year, their adjusted EPS declined by 90%. So it's getting destroyed. And revenue is not growing as much as it once was. So that's kind of the narrative, or what's going on with a lot of these stocks that did very well during COVID. They grew very quickly. Now their growth is slowing down. I mean, that's just the reality, and the stocks are repricing. They did revenue of $1.2 billion, which a year ago they did almost $1 billion. So that's only 20% growth, which I guess that's a lot. That's a good growth rate, but compared to what they were once doing, it's come down a lot. So keep that in mind. Gross merchandise volume was $3.2 billion, up 16% year over year. Not too bad. And they just bought Deliver, which I got to do more research into that, but I looked a little bit into it. They're a fulfillment company, and they did this deal for about $2.1 billion in cash and shares. I'm not sure what the split is there, but it's about a $2 billion deal, and that could be a reason why the stock is falling as well, because maybe some investors don't agree with it. Maybe they're overpaying, right? I don't know. Again, I have to look deeper into it, but overall, they didn't do well. E-commerce is getting destroyed right now in the short term. Again, Shopify, or Etsy rather, and Shopify, and eBay, and Amazon. I mean, pull up those charts. They're looking bad. I mean, I guess eBay is probably the best performing one, and that goes to say actually probably not. I mean, now eBay, geez, I didn't realize eBay's down 45% as well. So, I mean, it's better performing than Shopify, eBay that is, but maybe Amazon. I guess Amazon is the best performing one, because this one's only down, let's see here, about 40%, 38%. So, either way, all of them are getting destroyed, guys. There's no need to talk about little 5% differences. They're all down freaking 40+%. That is very, very bad. So I'd watch out for those. Maybe if we do get a sustained recovery in the markets, I would say these stocks jump back very sharply in the short term. I'm not saying they're going to go to all-time highs. I'm just saying maybe Amazon could go from 2,300 maybe back to 2,800. Maybe Shopify does see some sort of rally from, let's say, 350 to 400, maybe back up to 450, 500, maybe something like that, right? eBay, back to the mid 50s or something like that. So just realize, guys, stocks don't go down in a straight line. There's going to be little relief rallies and little mini pops like we got yesterday. Then there's going to be days where there's a big sell-off like we got today. So you got to be ready for everything. And let's see how long we're in here, about 9 minutes. And these markets just keep on bleeding out. Coinbase is down 12%. Did they report today? No, I thought I figured maybe they're down 12% because they reported. Geez, they didn't even report and they're down 12%. That makes me believe, is Coinbase, or not Coinbase, is crypto down today? It's got to be down a lot. I mean, probably a big amount. Bitcoin's down 6%. Big move down for Bitcoin. Ethereum 4.5%, XRP down 4.2%. So Coinbase is getting destroyed, and I'm assuming people are not expecting good earnings for Coinbase. That could be what's really being priced in here today, as earnings are coming up, I think tomorrow, or actually they're next week. It looks like they're next week on Tuesday, the 10th of May. So keep your eyes on this stock, guys. It's down 11%. Square's down 12%. DraftKings down 11%. So a lot of these stocks that had the big rallies, which, mind you guys, when we do have those big moves in the indexes like we did yesterday, Triple Q SPY, the stocks that move the most are the smaller, more volatile companies like a Shopify, a Coinbase, a DraftKings, a Square, a Snapchat, right? Those move way more aggressively to the upside when the markets are in the green in a big way, like we saw yesterday. And that works in reverse. When the markets are very deeply in the red, like today, and today's a very bad red day, I mean, Triple Q's down over 5%, these stocks go down way more than what Triple Q goes down. I mean, the proof's in the pudding. DraftKings is down 11%. Triple Q's down 5.3%. So this is an absolute bloodbath. And if you can take anything from this video, guys, just don't panic. You know, if you have a long-term time horizon, you should be fine. And you should just be nibbling. You know, that's what I'm doing. And I'm not a financial advisor, but that's what I'm doing. I'm buying my favorite stocks. You know, I'm not going crazy and buying 30 individual different stocks. I'm not doing anything crazy like that. I'm just focusing on, you know, my 3 to 4 individual stocks right now that I like adding the most into, you know, that I'm most confident with. You know, I like adding into those as they're falling. And obviously, you know, ETFs I've been buying VOO, which is the S&P 500 ETF. I've also been buying VXUS, which is about now 10% of my retirement account, one of my retirement accounts, right? So that is one I've been buying, VXUS. What's another one I buy in that? Because I just buy a couple of ETFs in my retirement account, guys. It's VOO, VXUS. There's another one. What the heck's it called? VOT maybe? I forget. Yeah, that's what it is, right? Because I don't check these accounts every day, guys. I mean, these are long-term accounts, right? So VOT is a mid-cap growth. I own some of that one. Oh, IJR. That's another one. Small caps. I own a little bit of that in that account as well, and some individual stocks. You know, again, we don't have to go over all those because we could be talking all day in this video. So that's it. I'll wrap it up. If you all enjoyed it, hit the like button, subscribe, drop me a comment, and make sure to join my Patreon and get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500. Just use that link down below, deposit at least $100, and you get up to 5 free stocks, and you get 1 free share of Twitter potentially. Go look at the details, link down below. I'll catch you guys in the next video. Peace out.